What's going on, guys? Ravi Abuvala here, founder of ScalingWithSystems.com, and in this video I'm going to show you exactly how you should be paying yourself as a single member LLC so that you're good to go in the eyes of the government, you're good to go in the eyes of the IRS and taxes, and you're good to go whenever you grow and scale your company and hire new team members. Now, before I go any further in this video, let me first just say I am not a lawyer. I dropped out of law school. I'm not an accountant. And you should always seek your own legal representation and own counsel before you make any serious decisions in your business. This is just stuff that I've done inside of my company, as well as a bunch of my other clients' companies inside of Scaling with Systems. Okay, so with that out of the way, one of the questions I get all the time is, Ravi, I'm a single member LLC, meaning I actually have an entity set up, but I don't know how I pay myself, right? Do I just write myself a check? Do I pull it out of my business checking account whenever I need to? Do I even need a business checking account? Do I put myself on payroll? How exactly am I supposed to be getting the profits from my hard work in my company, and how am I able to spend them? How to pay yourself as a single member LLC is probably one of the most confusing and not talked about topics online. However, it could be very dangerous if you don't set yourself up correctly in the eyes of the law. And I know it's not sexy, but it's very important. So this video is going to cover that exactly. So as I discussed in my previous video, LLC versus sole proprietorship, which one is the best for your business? The government, the IRS at least, actually sees an LLC and a sole proprietorship as the exact same thing, and they tax you the same way, meaning they see you and your business as far as tax purposes as one and the same. So that means that on a federal level, because once again, your individual tax states may vary, on a federal level, all of your gains and losses from your business as a single member LLC is actually going to be reported on your personal tax return. So I know you got on this video because you want to know how to pay yourself. So what does that have to do with how you actually end up pulling the profits out of your business and use it for stuff that you want to buy? Well, in reality, it means you can really do it however you want to. Since, the government for taxation purposes sees you and the business as pretty much the exact same thing, you can pull out what's known as an owner's draw whenever and however you want to. It could be an automatic withdrawal from your business bank account and a deposit into your personal bank account that happens once or twice a month. It could be that you have a check that you write out to yourself once a month at the end of every single month. Or it could be that you see, that pretty pink little pony and you want to buy that as a personal expense. And so you quickly go onto your Chase app and you transfer over $15,000 to your personal account so that you can give that money to the guy that owns the pretty little pony so that you can buy that for yourself. By the way, that was just an example. I've never done that before, ever before. I've never done it, no. There's no need for some real legal paperwork. There's no need to put yourself on payroll. You just need to have a clear show that there was an owner's draw, meaning you took the money from a business account and business expenses and you put it into your own personal hands. So that's really easily done with online banking or when you ever write out a check. All you have to do is just transfer the funds, and now your accountant can see at the end of the year that you took that from your business account and you took it as an owner's draw into your personal account. Let me caveat this whole conversation by saying, don't make the same mistake that I did. One of my first years in business, I knew that single member LLCs and sole proprietorships were essentially one and the same for tax purposes. And so I kept all of my income and my expenses in one single account for both business and personal. That can be an absolute nightmare when it comes to tax season for your accountant to actually go back and see which one was income from personal and business activities, which ones was expenses from personal and business activities. But even more important than that, if the government sees you what's known as commingling funds between your business and personal accounts, the veil of security that you get from having a limited liability corporation, the whole reason you probably have an LLC, almost goes out the window. Meaning, because you are actually treating you and your business as one and the same, not just for tax purposes, but for everything that you do inside the business, they don't actually see you as an LLC anymore. They see you as a sole proprietorship. And so for that reason, if anything were to ever go wrong in your company, you have a lawsuit, you went into debt, whatever could go wrong, they're going to come after your personal assets instead of the limited liability liability corporation that you set up with that LLC. No matter what, at the end of the year, you're gonna be taxed on all of the profits that your LLC, your single member LLC, brings into your company. It doesn't matter if you end up drawing it out of the business account and into your personal one, or if you just leave it the entire time in your business account. So don't be afraid to pull out enough money into your personal stuff if you wanna buy some things like a house or a car or whatever like that on your personal side instead of doing it on the business side, because at the end of the year, it doesn't matter, you're taxing all one and the same. Now, there are some serious advantages to having your LLC elected to be taxed as a corporation, like an S corporation, but I can't cover all of that in this video, but that's actually how you can make it so that you're taxed on a lower level. You're not taxed as high with like payroll taxes and all that stuff as a sole proprietorship or an LLC, but that's a separate video I'll have to create. If you guys want to see a little bit more on how to save some money on corporations and electing as an S corp, make sure you comment down below. So now you know how to pay yourself as a single member LLC, but do you know how to actually make it so that you're automating your entire company and you're taking in cash every single day on autopilot? I want to invite you to a free training that I created that is exactly how I scaled 2 businesses to 7 figures in under 2 years, and I did that leveraging stuff like automation, elimination, and delegation. I talk a little bit about my journey, how I got to where I am today, but I go really, really in depth on the exact business structures, the exact service models, and the lead generation techniques I was able to create so that when I was sleeping, when I was traveling, I was still producing money and profit for my company. So be sure to click down on the link below and get access to that as soon as possible. And also, if you guys got value out of this, if you'd like to learn a little bit more about, you know, entity structure, how you should pay yourself, automation, delegation, elimination, almost all things business, please, please, please make sure to like this video, comment down below what else you want to hear, comment down below any questions you have about LLC or entity structure, and make sure you subscribe to this channel so that I can send out more valuable videos to you guys every single day. Thanks for your time, and I'll see you guys in the comments.